Aloha, everyone. Joshua Hayes at BigWaveTrading.com. That pullback that I've been looking for the past 8 weeks, it, we continue to wait for it. I'm not fighting it. You don't see me shorting the market. You don't see me buying absolute trash that's just a paper creator like AMC and soon to be GME. I am going long swings. I decided to go ahead and halt the day trading because for some odd reason, go to my Twitter page. I posted on Twitter a bunch of recent swings and how I'm scaling out on the way up on all of them. And you can see we have some big, huge percentage winners. The problem for the past 8 weeks, I need the market to pull back so I can separate the leaders from the laggards. Right now, focusing on the leaders, but in the small cap land, since the IWM is not leading, I am not able on all of those winning positions. And you can see like BTOG, what is that? A 215% gain in 7 sessions since we went long. Why don't I have 20% or more of my portfolio in it? Because I can't get consolidations that are long enough. I can't get patterns with the proper structure that makes me, with 100% conviction and confidence, go, oh yeah, I can get long this stock and not have to worry about getting shaken out before it works, like GEOS or ATXS recently. Take a look at those. Recently, they're not grade A setups in my book, but they were grade B plus 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 to grade A minus 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 minus. I increased size. Both of them did a shake pull before working that took me out of that large position to make it back to a normal position before it works. So I constantly am not getting those grade A setups. Even when I come close, they're shaking me out before they work. And if I get long anything like BTOG before it works, or IMNM that we got off the moving averages, and I'll show you that in the next series of charts because I got 2 swings for everybody to end this video lesson. I'm not able to get that huge size. And on top of that, my personal day trading, that dynamic price action, I couldn't do day trading when I was young. If I couldn't do day trading when I was in my teens, late teens into 20s, and I only tried it for a couple of years. But if I couldn't do it then, I don't know why I think I can do it now, but I still think I can. So I'm going to keep trying eventually. But I had to take a pause this week. I finally put a timeout to the small caps. And then all of a sudden on Thursday and Friday, the stocks that I would have made my top focus in RBO on Thursday, IMBS on Friday, end up basically quote, quote, working. Would I have been shaken out because of my break even stop methodology intraday where I plan to get long and it works immediately and I start taking profits and then protect that capital? Probably would have been shaken out. And that's the problem. That dynamic price action, and by having that P&L on the screen right up here, by having that P&L on the screen, if I did this to it, made it a bunch of stars, or didn't even have it on my screen, I think I'd be much better off. But I can't take that P&L away. And I guess I'm taking too much size. But bottom line is I had to put the day trading on pause. The swing trading isn't quite lining up. That being said, guys, I have let my guys know that are members of Big Wave Trading since before the pullback started. What was my favorite stock in the entire market? AVGO. This is my number 1 stock in the entire market and has been since probably, let's go back to 2020. Where is that on this chart? 2020. This has been my favorite stock in the entire market. It's gone from 400 to 1,284 since that time. My second favorite stock during that entire time has been AMD. It has been a little bit more choppy, obviously, but still since about 2020 till now, 80 to 184. And at some point, I don't know when in 2023, it was whenever they had that first earnings report with their AI chip where they crushed earnings and sales, and the estimates for the upcoming quarters just exploded higher. It was sometime, obviously, in 2023. After that quarter, which looks like it was right here, what is my number 1 favorite stock now in the stock market? buy all pullbacks for the long-term portfolio, NVIDIA. Since then, it's gone from about 400 to 666. Well, whenever it's 1,000, that 666 number will be quite funny. But another stock that I was buying on the way down, I think it was around, I started to get back long in the long-term portfolios after selling off 50% in 2021 into 2022. Meta. In 2022, on the way down, I bought Meta 1, 2, I think 3 times, went much lower. Wish I would have bought it here. Clearly, hindsight's perfect. But I told everybody, I love Meta. Not for Facebook, but for the metaverse. At some point in the future, maybe I'll be dead, maybe not. Don't care either way. They're going to own the metaverse. The metaverse, brought to you by Facebook. So I've been bullish on Meta the entire time, and following the most recent earnings report, let's say that I started a rebuy here. Let's top tick this at 240. We're now at 485. I also have a position trade in Meta that's up 220% since we went long at Big Wave Trading. I'm selling some at the market, at the open on Monday. Am I selling any of my long-term position in Meta at the market, at the open on Monday? Nope. Why? Because I'm not going to sell any of Meta till it hits 1,000. Once it hits 1,000, just like NVIDIA, I'll sell some. So, long-term is doing great. The quarterly portfolios are back on in February because the portfolio A would be rocking this quarter. If I did a small mid-cap portfolio, it would not be. So we're going to halt that second portfolio in February until the IWM can start leading again, which it is not, clearly. Once the IWM starts leading again, then we'll start up portfolio B again. But for now, one portfolio, February about the 20th, 10 stocks, 10% of capital each, 90-day hold, full stop. Hopefully we don't have a gnarly pullback during those next 3 months. But either way, I want to get these portfolios going again now that we're at all-time highs in the S&P 500. Speaking of those all-time highs, before we get to the 2 new swing ideas, I want to show you guys something. I've been looking for a pullback for a while. Don't fight it. Don't buy. I'm not buying AMC. It's going to the moon. I'm not shorting the market. I don't believe this is 2008. Told you guys in 2021 to 2022 when the sell-off started, and at the 2022 lows when I was buying and told everybody I was going to do my main huge 50% load in the long-term portfolios. Once we got a SPY close below 350 and then a reclaim at 350, we only got down to 348 intraday, nailed that bottom, didn't make any money off of it. Well, I did make money off of it, but not what I wanted to. So I don't know. This isn't 2008. Not shorting the market, not buying AMC. But that being said, I've been doing nothing but bitching, moaning, and complaining to all my members the past few weeks that this rally is stupid. It's at stupid level. What you're looking at is the SPX weekly chart. We're going to go back 20 years, just since the last bull market started. This is a 21 EMA Keltner Channel with a factor of 3. See the 3 factor, 21 EMA, exponential. I want you guys to look at this. We are outside the 3rd ATR of the 21 EMA. The last time we were even at the factor of 3 of the 21 EMA Keltner Channel was in July of 2023. What followed? A pullback. But how often do we get above it? And how can we game plan above it? Well, let's just go back 20 years. Now, moving forward, you can see, even during bull markets, you get normal ebbs and flows. You never get too stupid. We don't even get outside of the 3rd ATR for a very long time. Where are we at? 2007 now? So from 2003 to 2007, that 4-year uptrend, not once outside the 3rd ATR on the SPX, proving to everybody via the simple ATR Keltner factor in the Keltner channel that we've never been this extreme. You can see though, you get extreme here, you break back above it, but you get more extreme. That only happens in secular bears. You will never see that in a cyclical bear. So here we go again. And once again, we never get outside of it, but look, we touch it. And when we touch it here in 2010, we pull back. So that's our first incident of touching this channel and pulling back. Now here we touch it, but we start to pull back, but we keep riding higher. So this is the last time we got silly, 2011, where I remember this being just a very weird time, the flash crash and everything that happened. And then you can see eventually, once you ride it, you actually get some real selling pullback. Now you're off the third ATR. But the bottom line is you don't spend a whole lot of time up here, right? Above it, you just don't spend a whole lot of time above that third ATR. Notice you get down here, undercut, rally. Like I said, nightmare period overall. But the great thing is we weren't getting a ton of quality signals. So the choppiness kind of aligned up with the overall swing signals because I can remember back then. Once again, you don't get above it till right here. In 2013, you get above it, immediate pullback, okay? But you don't pull back till you come back below it, right? So now we're riding it again. Pull back. Every time we get up there, we kind of pause and ride it. We never really close above it. Whenever we do, it's rare. We always end up pulling back. So now we're riding it, not closing above it, not doing much. Time to consolidate. 2015, 2016, I believe, what I'm looking at here. Yes. Back above it, pull back. Okay? This video lesson's getting a little long, guys. And now we're really getting stupid. Look at this. We ride it, we're above it. Now here's where things get crazy. 2017. I remember this was like the most insane market. Everybody thought they were geniuses. You get above it. Look at how long, and this can happen now, guys. This is what I'm talking about. Look at how long you ride above it and stay above it. It isn't until you get that crush candle below it that you then get back below this third ATR. So our stock market never did this before. And since 2003, this was our first incident above the third ATR. Eventually, you come crashing back down. This is why I have a tough time getting along anything that isn't grade A in size. Because when this happens, you don't know if this is going to happen here, 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 here. You just know it's going to happen. And the bottom line is we're taking too long making this video lesson. We get back here in 2020. We get back above it. We start to sell off. And then eventually the big plunge. But once again, this move here could have happened from here. It didn't have to happen later. And as we ride it higher again, we never close above it until now. So we can continue to go higher, but at this level, my red flags are, this isn't a yellow flag warning anymore. It's now a red flag warning. I can no longer take size in any setup unless it's grade A. Give me a pullback. I'll buy every pullback once we get setups, reclaims of 50 or 200 SMAs. Until then, going to pause. Let's get to the swing. Sorry, guys. Hope you guys learned something. Very long. All right, guys, I got two ideas for you. Now, the first one is FROG, and the one I'm bringing it to you is because on Thursday, I had I had a lot of new signals. I decided to not take two of them. One of the signals that I didn't take was XPO. Ha 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 ha. Funny, funny, funny. Gosh, the market's cruel. The other signal I did not take on Thursday was FROG. That being said, I got a better signal on Friday, but now because it's more, this is where I would have loved to have gotten long, should have gotten long, passed on it, just like XPO. But I'll go ahead and take that long idea now that I have the candle over candle, heavier above average volume, another pocket pivot point signal, and now on the daily I have the CMF curling going green, TSV going green. More importantly, on the higher time frame, triple green, 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 green. The squeeze is already fired and we're moving higher. Kind of wish it was a little bit earlier in the squeeze, but we're aligned properly on the higher time frame. On the daily time frame, we've got the 50 above the 100, 150 above the 200. That's good. That's what I want to see. The 100 and 150, it doesn't need to be perfect. And the 21 EMAs above the 50 SMA. I would like to get long FROG above FROG's high of day. The high of day is 35.03. So the buy stop would be 35.04. I'll add 35 cents, making it 35.37. Limit offset. I have to calculate my size from this low. My final stop will be this low. Earnings are coming up on February 14th. Keep that in mind. That's enough time for me to see if the stock works or not. But as each day goes by that this stock doesn't work, I will sell off a little bit so I don't have any binary overnight risk. Now, if you want a long idea that doesn't have earnings in the way, CMCO, it's an ER winner. They beat on the top and bottom line. Once again, saw this stock on Thursday with that reversal hammer, with the not quite properly stacked EMAs, but at least they're all curling higher. They're all curling higher. We're coming out of a loose squeeze. I'm triple green on the daily. I go to the weekly. I'm triple green on the weekly. I'm just coming out of a fired squeeze on the weekly. So CMCO, candle over candle. You gave me another pocket pivot point signal. Earnings are out of the way. I'm getting long CMCO above 40.02, 40.03 at 40 cents for the limit offset, 40.43. I am personally, because of the market, going to calculate my size from this low, but this will be my final stop, 37.92 minus 1 cent. That way I won't lose a full whatever the dollar loss amount is on this position. In a raging bull market, I might size in from this low, calculating my size, and risking to this low. In this tape, it's flipped. And let's not forget, if this is the start of a new bull market, we're not even in inning one. We're still in a QT market, and the Fed is still running off assets and or selling off assets on their balance sheet. We're not even technically in inning one of a quantitative easing market. All right, guys, longer video lesson. Hope you learned a lot. I'm going to end it here. Aloha.